I want to touch base. Thanks very much, Arat. I want to now touch base with Jonathan Schiessl of Ashburton Investments. He joins us all the way from London with his perspective on the markets, the view on India, the view on emerging markets, and the view on global equities. Thanks very much, Jonathan, for taking out the time. But let's start off with a microscopic view on India, because there's so much happening on domestic turf with oil prices impacting our macros, or suspected to impact our macros. How are you looking at the oil impact on India as of now and in related investments?
Yeah, so certainly when you look at EM flows and intra-country flows within the complex, India seems to be a consensus source of funds for other countries within emerging markets. I keep looking back at the macro. I see a lot of reports written about India today vis-a-vis 2013 when we had the taper tantrum, and to my mind, India is substantially better from a macro perspective than in those days. However, there's no doubt that obviously oil is a concern, and obviously with the election calendar and the fiscal pressures, then yeah, India seems to be going through a bit of a time at the moment. So I think probably the money that we've seen coming out, that trend possibly will last a little while longer. But that said, I think when you look at from a growth perspective and from hopefully a bottoming in earnings, which we seem to be seeing at the moment, then India actually could possibly become more attractive in the months ahead.
So are you a buyer in this fall, or you are also worried about the positioning of emerging markets, ETF outflows, and you like India, but you want to perhaps protect some gunpowder, hoping for better entry levels?
Yeah, we've got elevated sort of cash levels at the moment, but I think the thing with India at the moment is you can be patient. The market, I think, is stuck in a range for the time being. You're seeing good domestic buying every time the market comes off. So, we're certainly being patient. We've got an eye on a few positions which we'd like to either top up or buy, but we're not in a rush to get in at any time. So it's more choosing your price point. But I think, India, after a long period of underperformance, I think the sort of the stars possibly will start aligning a bit better in the months ahead. It's pretty bad at the moment with the oil price and everything else, providing that sort of fiscal headwind, shall we say.
Hi Jonathan, this is Sid joining in conversation. Now we are seeing some cooling off of US bond yields, 10-year bond yields from 3.11 odd levels to current levels of 2.83. We also saw crude oil coming down from 80.5 dollars per barrel to now quoting somewhere around 75. But what is not correcting is dollar index, and we are seeing now it is moving and marching towards 95 odd levels. What are the chances of dollar index moving substantially high from where it is quoting right now, and what would be the impact on flows if the currencies of emerging markets start depreciating further?
Yeah, so it's been interesting because I think if you look at the currencies which have reacted the most or weakened the most versus the dollar, actually, as a whole, Asian currencies have done reasonably well. Obviously, India has been one of the weakest performers versus the dollar recently. I think clearly there are some concerns about global growth beginning to get priced into markets, and hence that's bond yields, the fall in yields are potentially a reflection of that. And obviously, the dollar as a safe haven seems to, that sort of idea seems to probably gain a bit of strength. I think in the shorter term, a lot of, particularly the rupee and a lot of other emerging market currencies have taken quite a lot of pain. And I would expect a little bit of a rebound after a pretty bad sell-off. That said, the sort of, if you look at what's happening in Europe, global growth concerns intensifying, you could see the dollar carrying on for some while longer in its fairly strong mode that it's in at the moment.
Between the lines, you mentioned that you are looking at building positions in India. I believe you are seeing value in the IT sector. Could you enlist maybe 2 or 3 names where sufficient value is emerging for you to take a buy call or initiate interest at these levels?
Yeah, so I think IT used to be a few months back classified as a value sector. I think obviously the sector has moved quite positively over the last few months. obviously A, in line with the weakening rupee, and then B, obviously underlying earnings growth seems to be finally coming back as well. So I'm not sure if the IT sector is necessarily a tremendous value play anymore, because it has done reasonably well. That said, it's no doubt that investors probably have and continue to use it as a place to sort of hedge natural rupee depreciation risk. So I think that probably will continue for some time longer. We haven't changed our positions for some time. We've just got two mainline IT stocks. We have been doing some work on some of the mid caps, but obviously, as you're well aware, the mid cap names have done tremendously well over the last 12 months. So we were looking for a bit of volatility to come back before we start building maybe possibly one or two new positions there. But no, it's interesting. You know, I think if you look at the market as a whole, IT is no longer cheap. And then obviously the continued extremely expensive valuation in the staples space remains very elevated, and that probably won't change anytime soon either.
You know, Jonathan, if I look at HUL, Britannia, Titan, Staples and consumer discretionary, these are expensive stocks. But my sense is that institutional investors, and especially foreign institutional investors, they're happy to buy them, they're happy to own them. So in terms of return expectations for those who are buying, let's say, a Titan or a HUL or a Page Industries, the stocks and the businesses which you track, do you think one should not expect even double-digit returns from here now, or double-digit returns cannot be ruled out?
Well, I think the reality is you're not going to get a valuation re-rating. You know, we're already many standard deviations above the historical valuation point. So if you buy them today, really the upside you can expect is earnings growth. So I think you've got to look at individual earnings growth per counter you're looking at, because, you know, generally speaking, you'd think there's an actual case for a derating in valuation, maybe not a dramatic one, but there's certainly no more upside in valuation. So I think the earnings growth in the names is very important, but obviously I think it is a hiding place in increased volatility. And secondly, it seems that we're seeing more data out of rural India that things are picking up, and therefore these companies are viewed as plays on the recovery in the rural sector as well.
Okay.
Right. Okay. Jonathan, also wanted your perspective on pharma with the currency weakness likely to be a reality for some time. Do you think that for pharma, especially in the generic pharma space, Indian generic pharma, that there is an opportunity of export competitiveness?
Yeah, so I think that's possibly true. I think the space has been a disaster for quite some time, and it seems to be, if you look at some of the main, like for example, Sun, it looks to be bottoming out. The numbers were slightly better than expected. Yes, there might have been reasons, technical reasons for that. I think probably the generic space still does have headwinds, generally speaking, but I think perhaps some of the Indian pharma generic names probably have at least the whole FDA inspection sort of cycle is probably peaked, and if not, will get better from here. So I think there is incrementally some positive news flow out there, whereas not long ago it seemed pretty negative across every part you looked. Names like Sun, obviously the specialty business seems to be starting to pick up. So, you know, we only own Sun in the pharma space, and I think it's as a sector, when people have been looking for rupee hedges, people tend to sort of have herded into IT, and the whole healthcare space, because of the issues over the last few years, has been ignored. I think particularly if you look at the likes of Sun, perhaps that will change because the numbers were good, the stock reacted very positively, and it looks like it's basing out here.
Simple. Okay. So Jonathan, have your top three holdings, have they changed this year in a significant manner, considering that we've seen in this year the market positioning has changed? You know, crude has gone up, interest rates are not going to go lower, consumption stocks are making a comeback. So as a long-term investor, have you changed your view about your top three holdings in 2018?
No. So we're still, you know, placed pretty much as we have been. That said, I think what we're trying to do is slightly shift the portfolio into more growth type names, because I think if you look at the earnings season so far, I think whilst I think possibly we've underperformed on the profit side, I think what I'm quite buoyed by is the pickup in the revenue side, which tells me that this growth, which seems to be gaining traction, really is coming through, and that is being, reflected in the revenue line. But obviously, the margin pressure from rising input costs is hurting the profits line. But for us, why do you invest in an economy like India? It's growth, and obviously that's what we haven't had for some time, the growth coming through. So we're certainly quite optimistic that this growth will actually start, the indicators will strengthen in the period ahead, and that's why I think foreign investors will ultimately start to look back at India again. But broadly speaking, we've retained a fairly, we haven't really changed the portfolio too much.
Okay. Okay, so Jonathan, we've not discussed any names, and every time you come on TV, our viewers expect that you would share some names or some ideas. So let's not change the tradition. Give me an idea where you think you see there is possibility of a 10-15% return for next 4-5 years. Very reasonably confident of the long-term earnings growth trajectory.
Yeah, look, there's loads of names which we're positive, and I mean, for example, we took part in a very early IPO. We didn't actually do the IPO, but we bought a couple of days after of Sandhar Technologies. Now they came out with some numbers over the weekend, which it's obviously an auto ancillary stock, particularly geared into the two-wheelers and the construction machinery sector. The stock didn't do very well at listing, went off a little bit, and then actually it subsequently rallied quite strongly. But I think if you look at that space, and that's the way we've tended to play the two-wheeler, particularly the space in India, through the ancillary stocks, I think a company like that, which is geared up for premiumization, for the change in regulations, but also geared into a number of other areas as well, which are high growth, not really that well understood by the market, not very known. So I think some of those names out there have got tremendous growth opportunities ahead of them. So there's plenty of names out there, representing strong growth. I think the problem has been up to this point is a lot of the more traditional names that investors look at, you've seen quite a substantial valuation re-rating already, and the earnings just haven't caught up. So what we're looking for are counters potentially away from the mass market, the usual names, whereby we still see a valuation upside call aligned with hopefully a good upside on the earnings front.
Okay. All right, Jonathan, appreciate your time. Thank you for joining us, and thank you for patiently answering all our queries and giving us inside view as to why exactly do you like Sandhar Technology. And frankly, I don't track this one very closely, so I don't want to offer a comment on the valuations here. But what I'm tracking is that it's almost 2:30, which means time for us to take a commercial break. Last 1 hour of trade coming up when we come back.